Porsche 911. The insurance and depreciation surprise. What it really costs. The Porsche 911 is the car a lot of people dream about. Timeless design, serious performance, instant status. But behind the flex, there is a very unsexy reality. Insurance that can quietly punch you in the face, and depreciation that is not always what you expect, in both good and bad ways. In this video, we are breaking down what insurance on a 911 really looks like, how depreciation actually works on these cars, and what that means for your real yearly cost of owning one. By the end, you will know if a 911 is a smart move for your wealth, or just an expensive storyline. If you have ever thought, I will work hard now and one day buy a 911, this is the video you watch before you sign anything. We will cover the basic assumptions, price, model and ownership period, insurance ranges and what drives them, depreciation curves for new versus used. 911s, your real annual cost combining both insurance and depreciation, and a quick framework for who should actually buy one. This is not financial advice, just a realistic look, so your dream car does not become a nightmare bill. Porsche 911 covers a lot of ground. For this breakdown, we will use a modern, well-specified 911 Carrera as a baseline. Think of a new Porsche 911 Carrera from around 2025, with a sticker price of about $120,000, and options that can easily push this higher. We will use an ownership period of 5 years, but focus heavily on the first 3. The typical driver is someone in their 30s or 40s, with a clean record, good credit, and living in a major city or suburb. The used case is not a daily beater, but driven regularly, maybe 6,000 to 10,000 miles per year. These numbers are ballpark and vary by location, age, driving history, and exact model. Now let us look at the 2 big hidden costs, insurance and depreciation. Let us start with insurance, because that is the first surprise most people feel. This is not a Corolla, it is a high-performance, high-value sports car. What drives 911 insurance costs is the car value, around $120,000 or more when new, repair costs, because Porsche parts and labor are not cheap, performance, which looks like higher risk from the insurer's perspective, and your age, driving record, and location. For many 911 owners in the United States, you will often see yearly premiums like this. On the low end, for an older driver with a very clean record in a cheaper region, maybe $1,800 to $2,500 per year. In the mid-range, for a typical good driver in a metro or suburban area, about $2,500 to $3,500 per year. On the high end, in a big city, for a younger driver or someone with a less ideal record, around $3,500 to $5,000 or more per year. To keep things realistic, we will use a middle-of-the-road scenario, assumed insurance around $3,000 per year, or about $250 per month. That is already more than many people pay to insure 2 normal cars. But insurance is just the warm-up, the real story is in depreciation. Here is the interesting part about depreciation. The Porsche 911 is one of the best resale sports cars on the market, but it still depreciates, and if you buy wrong, you can still lose a lot. Let us separate new versus used. For a new 911, bought at about $120,000, the approximate depreciation pattern, which varies but we will keep ballpark, might look like this. In year 1, the value drops to maybe $100,000 to $105,000, so you lose around $15,000 to $20,000 in the first year. By year 3, the value might be around $90,000 to $95,000, depending on mileage and options. So from $120,000 down to, say, $92,000, you have lost about $28,000 over 3 years. By year 5, it could be around $80,000 to $85,000. Compared to many luxury cars, that is pretty strong, but losing $25,000 to $30,000 in the first 3 years is still very real money. For a used 911 bought at 3 years old, the story changes. Suppose you buy a 3-year-old 911 for $90,000 to $95,000 instead. You avoid that initial $15,000 to $20,000 first-year punch. And from year 3 to year 7, depreciation usually slows down. You might see something like this. You buy at year 3 for $92,000 and sell at year 7 for $75,000 to $78,000. Now your 4-year depreciation hit is more like $14,000 to $17,000, which is way less painful than buying new and selling early. Now, let us put insurance and depreciation together and look at the real annual cost. We will take 2 scenarios. a new 911 owned for 3 years, and a 3-year-old 911 owned for 3 more years. We will ignore taxes, fuel, and maintenance for now, and focus on the 2 big silent killers, insurance and depreciation. In scenario 1, a new 911 is owned for 3 years. The purchase price is $120,000, and the value after 3 years we will assume is $92,000. Depreciation over 3 years is $120,000 minus $92,000, which equals $28,000. That is about $28,000 total, roughly $9,300 per year. Insurance over 3 years, at $3,000 per year, is a 3-year insurance total of $9,000. The total silent cost over 3 years is depreciation at $28,000 plus insurance at $9,000, giving a 3-year total of about $37,000. That is about $12,300 per year, or roughly $1,025 per month. That is over $1,000 every month, before gas, maintenance, tires, or anything else, just for value loss and insurance. In scenario 2, a 3-year-old 911 is owned for 3 more years. Now you buy a 3-year-old 911 with a purchase price of $92,000 and a value at year 6 of, say, $78,000. Depreciation over 3 years is $92,000 minus $78,000, which equals $14,000. That is about $14,000 total, roughly $4,700 per year. Insurance might be slightly lower for a used car, but for simplicity, we will keep it at $2,800 to $3,000 per year, and we will still use $3,000 per year to stay conservative. Insurance over 3 years is therefore $9,000. The total silent cost over 3 years is depreciation at $14,000, plus insurance at $9,000, giving a 3-year total of about $23,000. That is about $7,700 per year, or roughly $640 per month. So just by buying a 3-year-old 911 instead of a new one, you drop your combined insurance and depreciation cost from about $12,300 per year to about $7,700 per year. That is a difference of about $4,500 per year, or roughly $375 per month, for basically the same car, just not brand new. Here is what this means for your wallet and your ego. A Porsche 911 is not just a monthly payment. Even if you think you are getting a good deal, depreciation and insurance alone can easily be $600 to $1,000 or more per month. Buying used, buying smart, and holding the car for a while massively changes the math. A 3 to 5-year-old 911, kept for a longer period, is way less punishing than buying new and flipping quickly. The 911 holds value well for a sports car, but that does not mean it is free to own. Good resale just means you lose less, not zero. Before you buy, ask yourself, am I okay with $8,000 to $12,000 per year in invisible cost, insurance plus depreciation, to own this car? Also ask, does that line up with my income and my goals? Or will this delay investing, buying a home, or building a business you want? A few simple rules before you buy a 911 can help. On screen text, Porsche 911 money rules. Screenshot this. Do not buy new if you plan to sell in under 5 years, because the first few years of depreciation are the steepest. Know your yearly silent cost number, add expected depreciation and insurance, and ask, do I still want this? The 911 should be a bonus, not a burden. If it wrecks your savings rate, it is too early. Consider 3 to 7-year-old models. You still get the 911 experience, with far less value leaking out each year. The Porsche 911 is one of the few cars that is actually worth dreaming about. But even legendary cars do not escape math. Insurance can quietly run you $2,000 to $5,000 or more per year. Depreciation on a new one can easily be $8,000 to $10,000 per year in the first few years. And a smart used 911 can cut that yearly hit almost in half. If this helped you see the real cost behind the badge, subscribe for more breakdowns on luxury, money, and big purchase decisions, and comment new 911 or used 911, along with your target budget, so future examples can be built around real numbers. Enjoy the dream car if you want it, just make sure the way you buy it still keeps your net worth moving as fast as the speedometer.